Hello, Warriors. We're almost there. How's everyone doing today? Mike, Ingmar, Bran, Ryan's in the house. Steve Bartholomew, how are you? Okay. Good morning. Good morning. And Blake is back. I'm going to start off with Ryan.
Hey,
So
good
Ryan,
morning, Coach.
hey, welcome back, Blake. Hope you had a nice rest.
Yeah, we'll
Yeah,
talk
right.
about that in a few minutes.
All right.
I was just reading this headline or this post from Truth Social post from Donald Trump saying that we will be putting in a 200% tariff on all wines, champagnes, and alcoholic products coming out of France and other EU represented countries.
Yeah. Yeah. Okay.
That just hit
Well,
the market
it
just
was
now.
ready. Yeah. So, that people need alcohol and they need wine more than ever.
Yeah. To deal with this, yes.
Yeah. Anyway. Okay. Well, why don't we start with the dollar? And Ryan, good morning. How are you?
Morning, mate. How you doing?
Good, buddy. So we're taking out this support line right here. Are you going with it? Or if not, I think you were going to buy it above 108. Is my
Um,
memory correct?
yeah, I'm not.
And
I'm not going
thanks.
with this because I'm still long. So I'm.
Okay.
Yeah, I'm keeping an eye on it. I'm not that keen to add because It will be adding quite close to the top. But yeah, 108.30, 108. I don't know. I might have a little. I might have a little look.
Okay.
Because we are breaking back down through that zone at the
Yeah.
moment, the 108.30, 70 zone.
Yeah.
And then we got that 108 level, and then 107.60 under that. So yeah, there's a lot of stuff going on in the German Parliament at the moment, trying to sort this debt break and the 500 billion magic money that they've found under the sofa. I think that's and also Trump obviously slapping this 200% tariff on all booze out of the EU,
Yeah.
which is hilarious. So
Yeah.
that's hitting the euro at the moment. You know what tariff news is like. You can be 100
Yeah.
pips lower in a blink.
Right.
So yeah.
Well, I mean, no matter what, I don't know what level you have, but I don't think we're ever, well, for a long time, I don't think we're ever going to have a chance to buy this level for a long time. Not before we see 111 or even higher.
Yeah.
I think before it's over, 118 is possible. Um, Probably halfway through the move, right? So 102, almost 110. That's eight, another eight gives you 118.
Yeah.
So you got to get, I'm welcoming this pullback to get long euro at some point here.
Yeah.
Eh,
It's difficult, isn't it? Because the environment we're in, you get a headline that there's no truce with Ukraine and Russia's not
Yeah.
going to move. That's when you'll get your 105 again, probably on something like
Okay.
that. But outside of
Okay.
that, yeah, it's got every
Yeah.
chance of keep going higher.
Um, our Treasury Secretary needs to get some note buyers in since they want to control. They're focusing on the 10-year. They better get focused and bring in some buyers. This, could be, if you're bearish, it's just an ABC. But if you take this ascending triangle seriously, breakout takes you to 450, 460. And with all the risk off we've had, all the weak reports, even softer or weaker CPI than the market was looking for, what's wrong with bonds? Okay, so this is when we're having big risk off. So we'll see. Maybe it's an ABC, but I was figuring maybe 88 for a trade on it from up here, and to be looking for higher yields right now is the minority opinion.
Yeah.
Don't you think?
Yeah, you might get that after the PPI data.
Okay. All right. Yen. You know, got to 49. That was it. That was the first objective. We going for the lows, or are we going to, do you think we'll put in a higher low and then make another run towards 151?
Well, I made this example on the flow show earlier. Okay, if you just zoom out a bit to capture the whole of the year's moving, okay, what we're seeing here, okay, is one-way traffic from that 161 area, 160 area.
Yeah.
Okay, we saw exactly the same in the euro dollar from 112. Okay,
Right.
so what you've got to look for here is the similar price patterns that stopped the euro from going down and got it to go back up. You want to see the similar type of price pattern happening here in dollar yen, and that might be this 147 level.
Okay.
Because we got that move to 147, it held the first test, it broke, we came back up, it held. That to me is a potential signal for a bottom. Okay, now if we get to 147 and hold it this time, then again, that is potentially a springboard for a move all the way back, you know, get back to the 150s and maybe even higher,
Yeah. Yeah.
or at least stop going down. But you've got a blueprint in what happened in the euro from 112 to 102, and now it's back at 108, 109.
Any idea what to do with the Aussie?
Ignore it.
That's a good idea.
I'm still in Aussie Kiwi shorts, and that's stuck as well. But it is looking to break above 110.30, which will get us out of this malaise between 110 and 110.30. So
Okay.
we had a similar type of move at the end of Feb. You can see that we came down to that 110 area, couldn't get through, and then
Yeah.
we ran on up. But it's looking a bit similar on this move as
Okay.
well.
Okay. All right. So dollar recovery, you know, yeah, I think it's a gift if we get a rally back to 104, 104 and a half. I think Jim was looking for maybe 105, but I mean, these are sells. Any decent rip is a sell. I still think we're going to par, and then 95. So I want to be sure. I want to be selling any dollar strength we get here.
Yeah.
Because this measures par, right? Pretty much, you know, 105, 110, they get you par. This is where I think there'll be a better rally from down here that could take us maybe back to 104 again. But, you know, I just would 104.75 would be nice. I don't think we're going to get to 105.
Yeah.
And then I guess we will talk about risk. All right. Are we going to hold or more lows coming on S&Ps? It looks like it could. We could get another break. I thought it may have been bottoming yesterday, but it looks like it could have a break maybe tomorrow on the PPI. And also, I know, I'm in my pyramid. We have a total lunar eclipse tomorrow. Oh, Wolfman Dale.
It's a blood moon as well, isn't it?
And it's bloody.
Oh dear. Stay off the streets. Dale's out.
Anyway, so you know, sometimes there could be inflection points, turning points. We'll see. There's a solar eclipse at the end of the month too. So a lot of stuff going on. Cayman's probably already, you know, in Asia, and Blake is back. Do you have your sea legs back, bro? You look at the charts.
I
Any
mean,
impression?
the answer to that question is no. I'm
Okay.
getting re-engaged with everything, and you know, the thing is, you know, I see like, you know, the euro pulling back, and you know, I wanted to ask Ryan really quick, since can you explain to somebody like me that just I'm just coming back into the markets and I'm seeing all these headlines from Germany that like, what's the hang up and why is the euro trading so heavy? I mean, obviously there's this big spending bill, But is it Germany trying to rein that in and saying, put some guardrails up? Or what's going on exactly?
Um, it's your typical politics. The leading party, the SDP and the CDU, and them, they want to put through this budget, this 500 billion euros that they've going to magic out of thin air. Part of it is they're going to release the debt brake, but that needs to be changed in Parliament. But the Constitution doesn't allow it to be changed in the lower house or something. And meanwhile, the Green Party, who can be one of the swing parties in any vote to push it through, are kicking up a stink because they obviously want concessions and their own bits and pieces in this budget, in this fund. The AFD are the same. So they're taking the case to the Constitutional Court. So it's really just about this 500 billion and whether they can get it passed, and everyone wants a piece of the pie, as always, in politics. And anything that doesn't get this thing through nice and easily, well, we rallied in part because of this money. And if it doesn't happen, we're going to undo some of that rally.
Sure. I mean, when we went from 105 basically to 109, I mean, that's a huge move in the euro.
Yeah.
So that makes sense why some of it's giving back at this point.
Yeah, pretty much so.
Okay. All right. That fair enough. So Dale, yeah, just to address your or to comment on some of your comments. It seems like I've been out for I've just been out for a few days since Saturday, but it seems like there's been a lot of volatility too. I mean, equity markets had a nice little pullback.
Well, you mean this whole decline?
Yeah, I mean,
Or since you went on vacation?
Yeah, I was just going to say, even the last couple of days, there was a decent move in it, and it looks like the market's trying to bottom out. But I don't know. I got messages from a lot of people, friends of mine, that when I was out, they're like, "Oh, I'm going to be buying this dip," but I don't know. It seems kind of dangerous at this point. Are you seeing any risk for a turn here? I mean, other than yesterday, we got CPI data that came in a little soft, but that didn't really help the market. I thought it would help the market a little bit better or a little bit more, but it hasn't.
I think there could be. We could retest this low again, but I've lowered my expectations. Maybe we get 38% back on, right around the 57, 70. I don't think the rallies, we got so used to in the bull market having big corrections and always had the ability to wait for the rally because it gave us a rally for us to get in and then go to new all-time highs. Now everyone's waiting for a rally to get short, and it's really not giving one. Normally, I'd be
Right.
looking at higher fibs, but I don't think it's going to be too smart to wait for what everyone else is, 5,900, 5,850. Maybe, but you probably have to start at 38% of all of this. And same thing in NASDAQ, maybe up to 38%, 2003, but that's still 900 points. But I look at NASDAQ and it looks like, see this? It looks like a flag, right? So
Yeah.
maybe we'll diverge after one more low, Blake, above 30 into the total lunar eclipse.
Wait, are you going to give us another howl?
No, because someone called me an old wolf, man, and popped my bubble. I'll
Oh,
tell you something, guys. I don't know I'm old, and you won't either.
Dale,
Anyway,
that my wife and I we laugh about it all the time, and actually a pretty the thing is your mind doesn't know that your body is where I mean your mind does. I mean, but in your mind you're like, oh, I'm not
yeah,
my whatever age I am. I'm
yeah,
still a young chicken.
yeah,
So
and
anyway,
yeah,
what I did notice about the S&P, and I noticed this while we were gone, is that we did hit and stalled the last couple of days at the 161% extension of the last move higher. So if you take your cursor, you see that low on the left of your screen, to the left of your screen, Dale. Yeah, just keep going. to that right over there to the left of your screen, upper left, right there, that low, then go down.
Yeah.
From there to the high, we're at the 161% extension. I believe, or actually, if you go a little bit before that, I think we have to. I can show you if you want me to. Yeah, that one, that low
This
right
one.
there, to the high,
Yeah,
to the
that-
right. It is
yeah.
the 161% extension. And we've stopped there for the last, 20 or 36 hours or
Well,
whatever.
people were bearish at the top, which was unusual. Usually there's euphoria. But now if you look at the greedometer or the greed meter, I mean, we're at excessive fear. The other day, it was a record amount of puts bought. And Greg had pointed something out that was interesting that says we are getting close to a bottom, is we had huge volume on this one down day. I think it was maybe early this week, Monday or something, where it looked like people were just capitulating. One of the highest volume bars on the chart. In fact, it looked exactly like the volume bar you had at the August lows. Okay, now you need some green volume. This was all red. Okay, but it shows that there was a lot of selling that may have been short term capitulation, not
Yeah,
long term, but short term.
and actually, I'm just looking at it on my screen too. I mean, all of our,
I'm going to
whether
give you the
it's
screen.
whether it's the high volume, the oversold here,
Okay.
I can show you from here. And as you pointed out, Dale, I am still trying to get my sea legs on, and also we're this is our first week of the time change, and I know this between this week and next week, our times are off. I mean, Ryan's flow show just literally ended about an hour ago, right, Ryan? I mean, it
Yeah.
if I got that correctly.
Okay.
Correct.
So
Is that correct?
you see, yeah, see everyone, yeah, the same kind of volume setup
Yeah.
that we had into the August low.
Yeah. So
This is a
there's
much bigger break, though.
yeah, it seems like a much bigger breakdown, and the volume came out, and you can see, or the volume was really high in that
Yeah.
sell-off. And like I said, relative strength is very oversold. Now, what most people want to do in a situation like this is start buying. But as you were just pointing out, Dale, and this is one thing that is going to be really interesting. We can see relative strength moderate, and if price fails to get back above like this level, so this resistance, which everybody's expecting, right? Because this is the type of market that people are accustomed to. They're accustomed to a sell-off, you buy the dip, and we go along our merry way and just go into an uptrend, back into the uptrend. If we don't get price to correspond with a bounce that we should get in relative strength, that means we just work off the oversold conditions. We're going to have another down leg, and it's going to be a nasty one too. That's what I think is going to happen. I think this sell-off is just going to stabilize, which we're going to get right now, probably over the next couple of days. And then a resumption of trend lower is just going to be a very nasty one. And I think that's what we're getting now. Do you agree or disagree, Dale?
Yeah, I mean, I want to sell rips. I'm still looking for 4,900.
I'm
And
with you.
yeah, so I was looking for that before we topped. I had that megaphone formation, and there's a lot of confluence. Look, you have a trend line. If you had some moving averages, they'd be coming in there as well. So yeah, that's where I think we're
And
going.
this is the thing that when you were talking about that, we were up here.
Yeah,
Was it like last
or even
week?
or even earlier before we got to the high. I already had the megaphone drawn because it never got back to the top of the megaphone. It's a weekly chart, and so now we're halfway there.
Yeah, I mean, yeah, and it looks
We're
gross,
halfway there.
and I agree with you. And there's so much confluence between a channel support breakout point. In this case, you would have, well, I guess the fib level's not going to be there because you're 50% right here and you're 618 right here. I could probably go from a lower level like this. Yeah, we could find the 618 right there.
Yeah.
That's going to be that just above the 4,700 level. But it looks like there's going to be a ton of confluence, and it's just getting there. And it seems like that's where we're going to go. And I think if you're going to be on the long side and you want to be buying dips, you have to be buying dips, as we approach this level. And I know it's far, and I know a lot of people don't think it's even possible, but if you look at it from a correction standpoint, that's when we get to the 20% correction. That's when everybody starts talking that the Fed's gonna,
and it'll
start...
be nearly 40% in NASDAQ.
Ooh,
because
God.
we've already, I mean, look at the NASDAQ 100, how much worse the initial fall has been, percentage terms, more than 10%.
And what's interesting, I guess, is that we did hit the 618, and we're kind of stabilizing there, but we're still broken through a trend line. It just looks like the market's still trading very, very heavy. And
looking for
I wouldn't...
15 grand there.
What's that?
Looking for 15 grand in NASDAQ 100. In the 15s, the handles. That 16 doesn't look bad either.
Yeah, I mean, that would be channel support. By the time we got there, you're right. I mean, that seems logical at this point. But let's ask Ryan really quick. Ryan, what are your thoughts about the CPI data that came out yesterday? Obviously, it was really soft. It was better than the market expected, and the dollar didn't really do much, did it?
It did for about 5 minutes, and then that was it. It was all over. Dollar yen went all the way down to what was it, 148.13, 15, something like that, and then decided to run all the way back up through 109. So plenty of moves, but we're in that situation that data moves, central banks, they're all fleeting moments in price action these days because of all this tariff and other stuff going on. So you take it for what it is and you try and grab a trade, and then you move back on. At some point, we'll go back to trading central banks properly. The inflation data itself, it was softer than expected, but as I've been pointing out for months, core CPI has been above 3% for going on 4 years now. It's still not below 3%. So until that changes, it's still sticky.
So with producer prices today, what are you thinking at this point in time?
We need to look at that because of the components that feed into PCE. And obviously, PPI is a much more volatile index anyway. But if it's another hot one, then the market's probably going to see the dollar rally, yields rally for 5 minutes, and then we might revert again. If it's a soft one, if it follows the CPI data, then again you probably get a similar move to what we saw yesterday. But then that's likely to be reversed yet again.
So what I'm hoping for is I'm hoping for a little bit stronger, a little bit stronger data, because everybody's looking at yesterday's CPI thinking it's, well, if CPI was weak, maybe PPI is going to be giving us a little bit of weak data. I'm just hoping that the euro, if we get some strong data, it allows us for a little bit of a pullback in the euro. I'd love to see a dip down to 108 to be on the long side. I don't know if that's just a bit of a dream right now, but that's kind of what I'm hoping for. So now
I think you'll get it. You'll get it.
I'd like to believe that we might get it. One of the things that's happening right now, I just sold some dollar MEX. If you guys are in the Forex Analytix chat room, you want to talk about getting my sea legs back on. I sold some dollar MEX at 20.1865. So
well, you had you did some on the ground research on your peso.
I did. Yes, I was. Yes, I did boots on the ground research in Mexico. Realized that tequila prices were really very well priced there. So that's what I did.
I think we're all going to have stills in our garages again.
after all these tariffs, yeah, probably. Yeah. But what I realized is the dollar MEX is trading really heavy, and we're back below 2020. And today, there's a USMCA meeting and negotiations happening. James just said in the chat room just a moment ago in the general chat room that Canada said they're not going to be in the US, but he was saying right here the Canadians said they weren't in the US to renegotiate the USMCA today. Well, I said that a couple of days ago, but I've heard that there is a meeting going on today, that I've heard. I don't know if that's the case, but what we should be looking out for is some possible headlines that can move the Canadian and the Mexican peso. Because obviously, if Canada's there in Washington, Mexico's in there, in Washington as well, there's I don't think there's a likelihood, because there are neighbors. A little bit different when you have like Zelensky in Washington. Then it's more of a show, right? You're putting on a show. But when you have our actual neighbors, sitting in Washington negotiating, I believe that the risk is for more, how should I say, nicer headlines, if you will, better negotiations, and so I'm going to be looking for some Mexican peso and possible Canadian dollar strength coming out of this this. Now, there were some headlines that came out yesterday, and I didn't quite catch them, Ryan, regarding Canada, because the dollar CAD was ripping past 145. Some headlines came out, and then we dropped back down yesterday. What were the headlines that were driving the market yesterday? Do you recall right off the top of your head?
Are you talking about the BOC?
Was it the BOC? I could have sworn it was some trade negotiation
Well,
headlines.
there was a flood of headlines sort of late evening here. When the US day was in full flow. I've only briefly looked at those because they were the same old. We're going to do tariffs. We're going to do less. We're going to do more. It was just the same old back and forth. But the Macklin was out twice. It was out over the BSE and a bit later. It may be indicating that they're close to a pause. Now rates are bang in the middle of their neutral range. So it might have been those later Macklin comments that caught the market.
I don't know. I was thinking of some trade, but that's cool. I get it. I want to go back to the dollar mex, because one of the setups that I've been talking about this last week, and one of the things, the reason why I want to be involved in this is a move below 20, and the dollar mex is massive for me, and it's something that I've been really hoping for. And if you look at the price action in the dollar mex, it's trading heavy. Any which way you slice it. Are you still short, Ryan?
Yeah, I'm still short from that last big high up at 2098.
This one over here?
Yeah,
Or this
I
one here?
managed to.
Yeah.
The last time we had the big move up there. Is that where we're at? 98.
Yeah, that's it right there.
Yeah, I managed to get.
I love the price action in the dollar mex. This is one of the trades that I think is going to be the best for 2025 is short dollar mex. I've talked a lot about it, and I want to make sure I have some exposure here. What can drive it below 20 in your view at this point?
A full agreement on tariffs and whatever stuff goes in this USMCA. That'll likely be the big driver of it below 20. I'm skeptical whether we can see it in this round of talks, whatever's going on, and before the April deadline. I'm expecting a similar play out to what we got at the March deadline. The week before, if there's no deals, we get all the threats and we see a rally in dollar mex, and then it all calms down a bit. But 2009.10 is where I'm looking to cut a bit more of my short, and then see what happens at 20 if we get there.
Yeah, and one of the things about the dollar mex is if it breaks below 20, I mean, that's remember, these would be levels that we're not seeing since election night, and it's just a complete unwind of the Trump trade, if you will. So I have we got the PPI coming out in just a second. You have the S&Ps here. Here's yields, and then this is the dollar index. So here comes the data. Should be out, and we also have weekly unemployment claims, which everybody will be watching as well. So Data should be out in just a second. Here we go. About 7 seconds. So watch these jobless claims too. I think that's one of the other things that people should be watching. It's the most real-time employment data we're going to get. All right.
Softer than
Softer.
expected.
Yeah, it is.
Bit similar to yesterday's CPI data.
This data flash is coming in pretty slow right here. Okay.
Yeah.
I see the PPI month over month is 0. Wow, it is softer.
So what happened? Did yields rally on that? I mean,
know,
did they
they're
come
not-
off?
They're coming off just a little bit. Unemployment claims came in better than expected, though. But yeah, we have weak PPI, weak CPI. So we'll see if that's going to feed into some more dollar weakness. I don't know. I mean, I think we're at a place, and we talked about this even before I left. Getting up towards the 109 in the euro has given us a level that we'd get some two-way price action, and then that's exactly what we're seeing. Is we're seeing a lot of two-way price action around these parts. So I think buying the euro on dips below 108 and selling it above 109 seems like the play at the moment for me, and I think that's what I'm going to be feeding into the next 24 hours. So Ryan, I want to thank you for being here, and I see Steve is here. Steve, thanks for covering for me all week. I know you've been taking care of the traders during the morning edge, so thank you so much for that, Steve. How's your week been, Steve?
How has my week been so far? Good.
Yeah.
Can't complain.
Well, thank you very much for taking care of all of our traders during the morning edge, and also during the daily roundup. Like I said, I just noticed that you were here, or I would have pinged you a little bit earlier. So, any comments before Dale goes on his interview?
But I mean, quite a lot to talk about. We're gonna do it during the morning edge. Let's not eat into his interview. All in all, though,
go ahead, take a bite.
Take a bite.
Yeah.
I think that we've had now for several days this ongoing theme of dollar weakness and equity weakness. And I think that for the time being, despite the last 1.5 days, the market's seemingly taking a breather, I think that it's likely that this is not over yet. So I'm looking possibly for a continuation.
All right. That means I'm in the same boat as Steve. All right. And so, Steve, I look forward to catching up with you on the morning edge. I think it'll be nice conversations that we have there. So thanks, Ryan. Coach, have a great interview. And it looks like you got Mr. Tony Nash here. So have a great interview with Tony.
All right. Thank you, Blake. Thank you, Ryan, Steve, all you guys, Stream Team. Tony Nash, how are you, buddy? A lot has happened since you and I talked 3 months ago.
That's right. Thanks, Dale. I appreciate this.
So Tony Nash, his company is Complete Intelligence. He's been utilizing AI before it became popular, right?
That's right. Yeah, we forecast about 1,800 items in markets, and we've been doing that for quite a while. And when you say utilizing AI, just so that people understand, we don't have analysts who change the prices in our forecasts. Regardless of what I think personally, we let the models speak for themselves, and we publish our error rates on everything that we forecast. So yeah, we have been. I didn't intend to be an AI company. I just wanted to be a data-driven company, and we've actually turned into an AI company over the last 5 years. One of the things I'll let you and your audience know is we're just releasing a product called CI Markets Alpha. So CI Markets is our baseline product, monthly interval forecasts. CI Markets Alpha is a product we're selling to trading desks, and it's daily interval forecasts. So I'm not sure if that's up on the website yet. It may be today or tomorrow, but we're selling that to professional trading desks, and we're doing daily intervals, showing our error rate so people understand the risks associated with the trades they're making. So I'll stop my pitch now, but I just wanted to let you guys know about that.
Okay, did the product come because of the times? because, we were in trending markets, a lot of trending markets for a while, but now that volatility has picked up everywhere with, tape bombs and truth tweets and everything else going on, that people are maybe gravitating more towards shorter term time frames to trade.
Yeah, it's interesting the interval expectation for reforecast, Dale. So, before COVID, we would do our forecast once a month. They were monthly intervals. And I came out of The Economist and I came out of IHS Market and all this stuff. And people there did quarterly forecasts or monthly or whatever. With COVID, we started doing twice monthly, and then we started doing weekly 3 years ago. And then our professional subscribers started pushing us to do daily interval. And yeah, with the volatility that we have, daily is critical for people. So our
Yeah.
subscribers get the daily forecasts on Sunday night so they can plan their trade for the week ahead. And so every weekend they get a new daily interval forecast for the week ahead and the next 20 trading days to understand direction.
And I do recall from our last visit, so I have to go back a ways, but I believe we were talking, you had 109 euro for a target.
Yeah, we did.
Well, is that true? Three,
Yes,
4 months
sir.
ago is my memory, because, I'm kind of old.
Yeah, we
So,
did. So am I.
all right, I'm just, my memory works better remembering other people's trades than why did I come into the kitchen? For what reason? Anyway, but I
get
can
that.
remember everyone's trades. So great call.
Thank you. Yeah.
I think the big surprise, based on recency bias, is that everyone probably thought that if we had risk off, that the dollar would be safe haven again. And we talked about it here at ForexAnalytix that this time, and this was before the market top, that it could be about outflows and confidence going a bit here for people to start repatriating. Because the euro bottomed a long time ago, 102. I mean, it was, well, we bottomed at 101.70 back in December. But do you look for a continuation of this move in the dollar? Pretty powerful move last week.
Yeah. I
Yeah,
think it's
go ahead.
it's easy to forget that when Trump left office in 2021, Jan 2021, the Dixie was at like 96 or something. And so, it's not, I don't think he's afraid to have a weaker dollar,
No, he
especially,
wants it.
yeah.
State,
And yeah, and
stated
that's
policy.
something. Yeah, we need to be prepared for that. And when you look at the trade discussions he's having, one of the tools that he and his team have is a weaker dollar. And I don't think that's something that is, I mean, that's not kind of an amazing breakthrough call there. That's just looking
Yeah.
at history. It's looking at the current discussion that's happening around trade. It's also looking at what's happening with bond yields and what Basant's going to have to facilitate in order to get lower long bond yields.
Okay, so I've been talking about yields. I'm kind of on the other side of the trade. Um, the boon rates are of course leading. So again, another sea change, that the differentials have been moving in favor of Europe, and that's why, one of the reasons why euro went. But to me, it looks like Basant better get some note buyers in here,
Oh yeah.
because if we get through here, I could see 450 for maybe a right shoulder, and I can't even rule out it taking out those highs. Where are you at on yields? And also, just to back it up, with all the risk off that we had, Tony, and
Mhm.
all the weak economic data, to me, bonds are acting lousy, and when it should have been a tailwind.
Yeah, and I think we're going to have to see more downside in equity markets for
Yeah,
bonds to rally.
yeah,
And so, your
yeah,
previous
a lot.
conversation was people saying, "Hey, I don't think this is over yet," and I'm with them. I don't think this pullback is over yet because we need bonds to rally in the U.S. so that those yields fall. And so, because why do we need yields to fall? Well, because We have commercial real estate that is very problematic. We have residential real estate that isn't necessarily growing at the rate that people want in terms of
No, it's a
prices.
problem. And people can't tap their equity. First of all,
That's
they
right.
don't have as much equity
That's
as
right.
they did a
And,
year ago.
right. And so
Go ahead. Go ahead.
your audience will appreciate this more than anything, but like, equity rallies is a narrow-based wealth effect, relatively narrow. Home rallies are a broad-based wealth effect. So if we look
Okay,
at
cool.
kind of the Trump philosophy, they're looking at a very populist, broad-based wealth effect, and that's what they want to bring back into market. So they're less concerned about equity markets than they are about long yields at this point.
Okay. So we'll see. I think the next few days are critical in the bond market. Do you have a view? Are you telling people to be long bonds?
I think at this point where, you have to be really careful about that, but I think, yeah, I would have a longish bias for bonds right here, because I think, Basan is a pretty determined, smart guy. So, we're going to have a longish bias for bonds here. But as you said, the next week is really critical in understanding how these markets break. And if we see equities continue to push lower, then that's a real opportunity for yields to break and start to fall, especially the long yields.
What if we get I always ask myself, if a market's not acting great when it has a tailwind, if we have some type of corrective move, and it wouldn't have to be a lot, that should pressure the bonds.
Yeah, you're right.
Right?
So, yeah, I think we really have to watch how much, let's say, the S&P is going to rally into the end of the week, right? So are we going to see a real strength come back before the end of the week? I don't really think so. I think tariffs, to be honest, are kind of a distraction for what's happening in the bond market. So that yeah, I think this tariff thing is, and I've gone into a lot of other interviews to help people understand global trade and how sophisticated that is and how complicated that is. The discussion that the Trump administration is trying to have is a very complicated discussion. The bias in media and banking and other thing is that Trump's an idiot and he just doesn't understand trade. And if he did, he wouldn't be doing this. It's like, no, I actually think he does understand trade. Whether he does or his advisors do, it doesn't matter. And it's a very sophisticated discussion to be having, because effectively what he's doing right now is having an entire WTO negotiation round in like 3 months, right? So I don't know if you remember like the Doha
I do.
round of the
Yeah.
WTO. That was like a 10-year discussion that all these people had, flying off to nice resorts and hanging out and, whatever, incremental progress over a decade. Trump's doing that in 2 to 3 months. So he's restructuring global trade over some items to, frustrate and disadvantage his counterparty, and really restructure global trade, very, very quickly. These guys
Okay, keyword, restructure global trade.
Yep.
So what comes with that is a change in how the supply chain is going to work. Isn't there an issue with people changing shipping routes and everything else that we could have bottlenecks, shortages, problems with taking apart a 40, 50-year trade system, taking it apart and starting over? Doesn't sound like there could be a rocky transition during that process, right?
Well, I've heard statements out of the White House saying that we may have some short-term pain. And I think when people hear that, they think that's a justification or an excuse or, some sort of backpedal. I actually think the basis of what's happening is this. There are a lot of subsidies and non-tariff barriers in global trade. So under the GATT, which was the predecessor to the
Right.
WTO, the average tariff was 35%. Okay. Under the WTO, the average tariff has been 2.4%. But what's happened? We've had a massive proliferation of non-tariff barriers, which are largely regulations and subsidies. And so what the administration is trying to do is to get that full cost on the table. Subsidies, non-tariff barriers, and tariffs. So what the administration is doing is going across and saying, hey, we're going to equalize. So because you have these subsidies, non-tariff barriers, we're going to equalize that cost for you. And we're going to raise tariffs so that this is a very transparent negotiation. Now, I believe what they're trying to do is, of course, they want manufacturing in the US, but I think the reason Scheinbaum is playing ball in Mexico is because some Mexican leader realizes that China is a direct competitor to Mexico. And so what the administration wants is a lot of that stuff that happens in China, they're happy for that to move to Mexico. And Scheinbaum is in the middle of that, and she's going, wow, okay, I finally get it. And so she's playing ball and not doing retaliatory tariffs on steel and aluminum because she understands that a lot of manufacturing is going to come Mexico's way as China kind of falls out. Now, Dale, here's a big issue that I want your guys to understand, and this is driving a lot of this. We're at a place in global manufacturing where automated manufacturing with AI, the next generation of factories are going to be AI driven.
Robotic.
Exactly. And so a lot of the labor arbitrage that China has had will erode over the next 5 years. And so the administration understands that all of these manufacturers have to invest in new plants. So if they invest in those new plants in China, it is there for the next 20 to 30 years. If they act aggressively now and get those new AI-driven factories in the US to stop that labor arbitrage in China, then that element of GDP is captured in the US. That economic value add is captured in the US. And so this is a generational point because during COVID, people realized what an issue having a China-centric global supply chain is, right? And so they're thinking, yeah, it's possible and helpful to have something outside of China, but then we have this AI boom that is saying, and I know that a lot of the guys like Microsoft and other guys are working on automating big factories. And so that generational change is driving the investment. So we have these 500 billion and $1 billion investments coming into the US.
Yeah.
That's the real opportunity. And I'm certain that that's what these guys are pitching to these large manufacturers.
Okay, so what's the time involved for Apple to get something like that built and operational? And Tony, it all sounds really good. I mean, we've been hollowed out. I grew up in the Midwest. I know what happened to people in the Rust Belt. Okay, how they struggled under the new paradigm. But is it possible that we're too vulnerable short term? We need things that China makes, and this reshoring effort. I mean, conservatively, 4 years, 2 years, it's a matter of years. And can China any day, like today or tomorrow, and say, we're not sending you what you need for pharmaceuticals. Oh, your transformer went out. We don't make them here in the US. And China goes, you can't have that transformer.
Great.
So aren't we very vulnerable during the transition of this plan?
I think if that happened, that would be perfect because that would force US consumers and, say, assemblers, people who buy parts from overseas, that would force them to contend with the fact that China is not a good faith partner. So, and this is why they keep saying short-term pain. China may do that, but what I've been saying since election night, and Albert Marco and I do this podcast every week, is that China will aggressively resist Trump's calls for different terms of trade. They'll aggressively resist it for 3 to 6 months, okay? Because they're nationalist. There is not a single Asian government that is not nationalist. So China will resist it for 3 to 6 months. Then after that time, they'll publicly align with what the US is doing. Okay. But
Wow.
they have to publicly resist, and then they'll
Right.
align because they'll realize that no matter what they do, the US will move around it. There's a lot of pharmaceuticals manufactured in India, and that's growing very quickly. And if you notice, PM Modi was one of the first
Yeah.
people that Trump had to the White House. So when we have those pharmaceutical APIs produced in India, manufactured in India, and
Yeah.
then you have the final, say, combination made in the US, is that something we can live with as a country? Yeah, possibly.
Yeah. I tell you what a great explanation. Let me wrap it with this. Do you believe, there's still a lot of bulls out there. A lot of bulls didn't get short. Even the ones that wanted to get short were looking for 6,400. And the super bulls were looking for 7,000.
Mhm.
Do you still think that's I would think that you think that's a possibility still and that this is a correction. Am I reading you correctly?
I think that's still possible, but yeah, I think we have to have the equity correction so that yields are forced down.
Okay.
That's the kind of macro statement that we all
What
have
do
to.
we need? What level in the S&Ps is going to take the 10-year, say, back down to 3% or two and a
52,
half?
53, 52, 53. You
Okay.
know, I, I, I don't think that's too far from
No,
here.
yeah,
And
it
I
isn't.
think you get capitulation at that point, and you have a lot of transition into bonds at that point.
Okay. All right. Well, I encourage anything else you want to wrap with. How about oil, which everyone hates? Are you in the camp that we're, because of demand being weak here in the US and China, that oil prices are going to continue to decline? Or is there a contrarian long coming up here?
I would give probably a 30% chance of a long, but I think with the OPEC Plus announcement, and I think the possibility of a Russia-Ukraine deal, that I think a likelihood in 2 to 3 months that we have a lot more supply coming on markets. And so, I think my bias is for a
Down.
downside in crude markets, not dramatic downside, but downside. And the administration is pushing heavy for that in case China says we're not going to ship you X or whatever, right? So they have to push energy prices down so that affordability isn't impacted too much.
Okay. You seem to have a real handle and a belief in what's going on with the new administration. So, if you're a stockbroker, it says know your customer, right? That's a number one rule. Know your
Yep.
customer. So let's say we know our customer, President Trump. Do you think that he's going to let it go with his belief that Iran is behind assassination attempts and that they still want to take him out, and that Netanyahu has been on a lifelong mission to make sure that Iran doesn't have a nuke? Is there going to be a geo event? President Trump, you could say everything he's doing economically is great, but he really doesn't have the personality to, just let it go, let it slide. Do you think we're going to hit Iran?
I don't think we will have a major conflict with Iran. I think part of the triangulation that he's doing with Russia is to impact Iran. So he's
Okay.
trying to hit Iran in a confrontational way with Israel, and he'll also try to hit Iran in a kind of uh, kind of friend of a friend way through Russia.
Okay.
And I think that is the bigger driver of the discussion with Russia than Ukraine. I don't think Ukraine is not a massive strategic location for the US, at least according to
Right.
most Americans. So I don't think Ukraine is the main discussion underway. I think Iran is the real focus in that discussion, and Ukraine is kind of a byproduct. I'm sorry, that's not a popular opinion,
Okay. Well,
But I
then
think that's
Israel's just going to have to learn to adjust to Iran being a nuclear power.
maybe. And
Okay.
I mean, we have India, Pakistan 25, 30 years ago that happened. And, all it
Yeah.
did is create a better relationship between the two.
Okay. I'm telling you, this guy sees the glass half full every time I talk to Tony. You, you're on the wrong show. I'm kidding you.
I can
It's
see that
great.
a lot of the comments, a lot of your viewers think that I'm dumb. But here, just a little bit of background.
Is that what they're saying?
I lived outside of the US for 25 years. Okay. I
Dumb.
lived in Europe, I lived in Asia. I've done business with a lot of the governments around the world, including the Chinese government. I've spent a lot of time in the Middle East. So, I don't, my view is not necessarily kind of a happy clappy view. It's a pragmatic view. And I think at the end of the day, most of these leaders will have very tough rhetoric, but at the end of the day, they're pragmatists. Because in some of these countries, if they're not pragmatists, they're dead. I mean, in China, if Xi Jinping is not a pragmatist at the end of the day, he doesn't live much longer. So in Iran, the same thing. These tend to be very aggressive regimes because if they don't serve their people on some level, then they're not going to be alive.
Okay. All right. Well, Tony, I enjoy your insights every time I get to talk
Thank you,
to you.
Dale.
And, I would encourage people to check you out and check out Tony's new product that he's coming out with. If trading desk institutions are looking at this stuff, maybe you should too. And Tony, I hope you have a great next quarter. And you and I be talking this summer in June,
Thanks, Dale.
hopefully.
I appreciate this. Have a great
Oh,
day.
all right. Tony Nash, nerd. And everyone should have a nerd like Tony for their intelligence gathering. All right. That's a
Thank you,
wrap,
Dale.
all right, buddy. That's a wrap, everyone. Don't just count your pips, count your blessings. Could join the team in 18 minutes on the morning edge. Tony, nice to see your name in here. I wondered what happened to you. I hope you're okay. I've noticed that Saloom hasn't been in here lately. So anyway, have a great day, everyone. TGIF tomorrow. And we have Dick Matthews with us to wrap the week. So you're a fan of who? Tony Nash? All of us. All right, Tony. It's great to have you here. All right, everyone, have a great day. And see you tomorrow. TGIF will wrap it up.